tryna take it down, place for you just scoring minds, best of bar.
All right, ladies and gentlemen, I got your watch list coming in December 27th, 2019, and the stock market is going crazy. I hope you guys are ready. There is a lot of plays, and tomorrow is going to be a Froggy Friday, so this is either going to set up a lot of really good opportunities coming into tomorrow and just, well, the weeklies and then even the next weeks and then the strategies, and that's all important, but how a lot of the plays are setting up. So get ready, because if we don't see a big move tomorrow, it is definitely coming in next week, and there's a few reasons why. So I'm going to go over that. I'm going to go over the plays we made today. I have a play for you guys. We did it on stream, but not really on stream because y'all was lacking. But I'm going to go over that. I want to talk about the keys for tomorrow. I have those outlined, and then we're going to even go over some of the other plays that we made today as well, and then what I'm looking at tomorrow and what I'm going to hunt for. So you better be there in the morning. If you do not know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. Hopefully, we see you there. All we ask is that you are positive and respectful, and then the most important thing you need to do, post your watch list below. Let us know what you're looking at. If you guys have any plays, you have anything you're looking at, call it out there below. But tomorrow is going to be a lot of fun. Hopefully, we see you there, and again, keep up with the watch list, and then you'll see what happens coming into next week. You know, a lot of the plays for the last 3 weeks, we haven't made too many plays, but they've all hit. Those AMDs were up 1,300% this morning. The booking play hit all of those. So let's keep it rolling, baby. Keep it rolling. Slow and steady. So quite simply, there wasn't really any news today. There was even, you got to see the resiliency of the market. Then pretty much at close, you saw the end of the day rip. And this is one of the keys coming in tomorrow. We are going to see this a lot. And we've seen this style almost every single day with how the markets move. Just done nothing, pop, nothing, pop, nothing, then pop. It's just been stair-stepping up. So it's been a slow melt up. That's why they call it a melt up. And this has been confusing a lot of people because there is opportunities. But you're not seeing it happen in big moves all at once. But the cumulative move is definitely adding up. So watch out for that. We don't have any real big news headlines. There is some stuff in Europe. But keeping a tentative eye on anything, because I think regardless, the Fed and all that stuff is going to take everything over. So let us get into the keys and we will discuss this. So tomorrow is going to be a Froggy Friday, but the final touch is here, man. December 31st. So tomorrow's going to be the 27th, and then coming into the final Monday and Tuesday, there's a few things set up. One, not only is it going to be New Year's Eve and you're going to get another slow, shorter week, but December 31st is going to be the biggest date of the repo. So again, I've explained this a few times. A lot of people are confused on what's the repo, this and that. All you got to know is there's a bunch of government or Fed money coming in, and that is what's causing these weird movements that you are seeing. It's not because of fundamentals. It's not because of news. It's not really because of anything but that. At the end of the day, that's really my opinion on it. But get ready for those slow but big moves as we just discussed. But now playing tomorrow and knowing what to look for, even coming into next week, even coming into January, the key is going to be divergence and laggers. If you guys haven't noticed, that is how we hit some of these plays. We hit the booking. Those are up. But remember, a few days ago, they were lagging behind, and I told you keep an eye on them. And sure enough, they've moved almost $100, which is pretty crazy. Another one, they had a crazy move today. The options went crazy, but I told you guys to look at this. Remember, I dedicated a chart. It was on the beginning of the week. They went up 4.62% Amazon. You see that calendar, they were lagging behind. Remember, there's a lot of companies that were pacing with the SPY. They had the recovery and kept going up, but then there was ones that were lagging behind. So another one is kind of like Facebook. I'm going to watch out for them, but keep this in mind. And even on the reverse, and these are all plays to be watching. Both Amazon and Booking tomorrow, we're still in that play. But now take a look at Disney. They are giving up. They're reversing. So again, this is what we're talking about with rotations. So you're seeing how there's some that haven't done it, and there's some that are pretty much going and following the SPY. That is going to be the key. And the ones that are lagging behind, if the market really starts picking up, those are going to provide really, really good opportunities. So I'm going to keep my eyes on those. But we'll see what happens tomorrow. Be on stream, make the call outs. You're not going to be there. Get your stream insurance, aka your stream alerts. But it's going to be a Froggy Friday. Be smart and ghetto spread the next weeks. Oh my, get it. Don't do the weekly. There's too much opportunity, and even next week's going to be kind of a weird week with New Year's Eve again. It's going to be kind of like this week, but give yourself more opportunity by going into next week. And then at the same time, what we learned from the Ghetto Witch last week, it was very, very hard to do the ghetto spread on the weekly unless the stocks made big moves. So we will be able to pull that off with the next week. So that is what I'm going to be looking for. But let us get into the plays. So right off the bat, I am going to look at Disney. I considered making these a trade today on the long term, and I did make a few long terms that I'm going to actually talk about here. We did some covered calls. We switched up here with the Snapchat, but wrong chart. The first play that we made today that I had to hold back from you guys was Intel. So again, remember I told you guys I was looking at these. I said I want to make a bigger play on it. We saw them last week. If you remember, we got the 64.5s for January 17th, and that's the week before earnings. You can play after earnings, but there's a little bit of a premium. I'm playing the week before to kind of play, hopefully, a run up into there. But we got the 64.50s the other day or at the beginning of the week. Those went down in value, so I averaged down, but instead of getting the same contract, I went further up the chain. So I grabbed the January 17th Intel 63.5s right here. I grabbed 5 of these at 12 cents. So I spent another $60 there. So now we're in like what? 150 total or 130 total. I'm moving myself up the chain. So that's something you could take from the averaging down sense. Not necessarily getting the same contract because these are further out the money, but I'm going closer and closer. And then again, depending on what happens, we'll be able to finesse in between there. But that's the play I got. I'm still going to be looking at them and I like them. And then the next thing we're doing tomorrow, you guys got to be smart on those bookings. So we're already holding these. And if you don't remember, they expire tomorrow. It's a 2077.50 call, and then we sold the 2082. So pretty much if we get a $10 move here, we're going to be sitting there at max gain. But we're near the first one, so not max gain. But depending on how it moves, this one, if we see a pop early in the morning, I'm going to want to get rid of that one quickly. Then we also have the weeklies on the AMD. Those were the ones that were up 1,300%. They closed up 400%, but we have the ghetto spread on that one. Same $500 max gain. So I'm going to be watching the bookings in the AMD, but be careful in the morning, but also we're going to see how things play out. And then we still also have those Januaries, and then also, I forgot, here's the Januaries on the Robinhood account. Those did pretty good. I still haven't ghetto spreaded those, but look at the Bank of America calls. So we're making money on the sell. We lost $25 there, but we have another couple $100 to draw out from that Bank of America. So depending on how tomorrow moves, I'm going to be watching Bank of America very, very closely. It's at a good spot. And again, it's starting to break out there. So watch out for those. Be cautious with playing them. If they expire tomorrow, you can't even roll them over. If they gain value in the morning, don't be afraid to sell out of them and then go buy the next weeks to roll over and give yourself time just in case, because if it expires tomorrow and doesn't end in the money, you are going to lose. Even if it ends up in the money, but you bought it weeks ago and the premium's high, you will still lose. So keep that in mind. And then lastly, we did covered calls. We did a lot of movement on the long-term portfolio. Pretty much Snapchat kept going up. I was like, all right, I kind of want my shares. I said, we'll just switch over to the covered call. So what did I do? You guys remember I sold that put for $37 last time, or $32. I covered that for $3, so we netted like pretty much $30 or $29, and then I covered that other one for $1 gain. So we covered that so we could get our buying power back. And then I bought 100 shares of Snapchat at $16.10, which was pretty high. But this is why I did it. I said I'm just going to go sell covered calls on it now. And then because I'm going to be depositing more money in here, so now if it does go down, I'm just going to start selling puts on it. If it goes down, because we'll have more capital, and if not, if it keeps going up, we'll take advantage of it. But I sold, and this is a covered call. So just like we did selling a cash secured put, which was the opposite, now that we own 100 shares, I sold a contract at February 20th, a $20 strike for $37. So I got paid $37, and I agreed to sell somebody 100 shares of Snapchat for $20 a pop. The best part about that is I just bought the shares today at $16.10. So if it does end up going there, I will have to sell them the shares at $20, but that would be a guaranteed $400 profit plus the $37 I collected. So again, just like this strategy, what did I do after that? I collected the premium, $37, and then I went few minutes later, 2 minutes later, I went and I bought 2 more shares of Snapchat for $16.12 each, which was about $32. So I took $37 I got paid to agree to sell my shares at a gain, and then I took that money and then I bought more shares. So now you see here, I'm holding 105 shares. In this month that we've done this, I finessed the purchase and selling of contracts there while utilizing the long term, and I got 5 free shares of Snapchat. This is all the extra shares were paid for by premium, other people's premium. So that's how we're doing it. And again, that's what I'm gonna say. You're gonna see how we do that on the reverse side. But then I also grabbed 9 shares at AT&T at $39.09. I wanted to collect the dividend, and I had $300 left over. I didn't want to sell those small premiums like I did last time on the puts. There wasn't much I could do, so I figured we'd get some AT&T, and I wanted to balance it out because you'll see now the portfolio is going to start to move very, very big now because we have $1,600 in a stock. That's a big amount of investment, and I'm kind of nervous because Snapchat went up, but we're building a position. We're holding this long. You guys see, even though I bought it at $16.10, since we have 5 free shares, our cost basis is lowered to $16.04. That's pretty much the whole point of this. Throughout the next few years and quarter after quarter, we're just going to be getting more and more shares and trying to lower this price. But that's pretty much it, and that is a covered call, too. If you guys don't know, it's a covered call in its purest sense. Because since we own the 100 shares, it takes 0 buying power to sell that. It's covered and secured by the options. But besides that, let's get into the rest of the plays. I'm going to be playing Disney. I'm going to be looking at them. Again, they're a lagger, and I really, really like them because if things do start picking up, I think they got some oomph in them. I might even pick them up on the smaller YouTube portfolio. We will see, but there's them. Then there's Shopify. I think they went under a lot of people's noses today, but they're breaking out of that 409, and I believe, I thought 411. I know 411 I feel like was a high point, but I guess it was 409. But if they start breaking out from there, that could be very, very good. That could be one that we could flip on the weeklies or the next week's tomorrow. Then Amazon, we have that old January play. I don't know if you guys remember. We spent a lot of money on it. I did, at least. I put $600. It was down like 70%. And now that play is up 30%. We have January 2000 calls, which is great. So pretty much if we get another $150 here in the next month, those are going to hit, and those have a $10,000 max gain potential. So pretty much, if this goes to $2,000, we're going to turn 600 into 10,000. So that is that play. If you guys were there, it came back to life. You could have got it. So we have our hands really, really deep in this cookie jar. So we're going to see. But again, there could be some good plays to finesse, especially how Amazon opens tomorrow. I'm going to be keeping an eye out on that. So that's going to be fun. We still have the AMDs. We're waiting on those ghetto spreads. I'd watch them tomorrow, and the Bank of America. And then Snap too. Again, from a long-term standpoint, I like them. But you guys could even see if it does start to break out here, watch that. They're either lagging behind, or again too, they've operated in a pretty interesting fashion. So watch if they do end up breaking out, or even if they inverse, because again, sometimes if the market goes up, some of the not so good performers that haven't beat, that's what I'm saying, the laggers are either have to catch up or they're going to rotate out of it. And then that's the next side of companies to watch, like Home Depot. You could see they didn't do much, but another one, McDonald's, was actually down and then it came up today, but there's some stuff rotating out. I guess Disney is probably the best example, but watch them. Watch Boeing. They're down. Our play actually went down today. They look like they're doing the same thing. They're going to hold that 330. I'd watch for the mornings and the gaps, or even, again, tomorrow after hours. They always drop that news pretty much right before. So keep your eye out for Boeing. I'm going to be watching that. If anything, we might average down on the play, but if there's too much momentum and everything else, we'll just let Boeing go, and we'll go after something that's offering more of a yield. But then also watch Nike. Remember, we have that Iron Condor. I forgot to cover it, but that thing's up 100% if you guys remember that one. But pretty much we'll only lose if Nike goes above $3 tomorrow, which is unlikely. But even then, if I wanted to protect that, there's going to be some cheap weeklies on Nike. So I'm going to be watching out for them. And again, they're at 100. They're post earnings. Don't forget about them. And then Intel I like a lot, and then Coca-Cola. This one's for you guys. A lot of people brought it up with CBD, ABC, Elemental P, whatever you want to call it. But I just like them in general. They're a lower volatility stock. They're kind of hanging up a little better than some of the value stocks, or they're kind of pretty much a lagger of the value stocks. So keep your eye out for them. They're lower volatility. If those start to move, Coca-Cola, you could see if it starts to have those big moves, it could get pretty dirty. So keep your eye out for them. And then lastly, Facebook. This is kind of reminding me like Amazon, but then also Microsoft. Microsoft's doing it better, but Facebook is one. That one also moved under our noses today. Don't sleep on them. Again, they were up pretty high, I think, 217, 220. So if they break out through here again, they could start going. So I will probably look at calls tomorrow, or even see how we could set up on that. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you there tomorrow. Don't even sleep on the watch list. You better stay tuned with everything. Post your plays. Make sure you got that armor on. Polish the armor. Get the helmet on. Tell me what is in your hand, baby. Focus on what you got. Keep your eyes peeled tomorrow. Make some call-outs. Be positive, respectful. Send the blessings. You know what to do, baby. We're in the game. Let's go!